Is it working? It's working. Hey everybody, welcome to the Closing Beat. Happy Wednesday. How you doing? You know, I have a thing right in front of me here. It tells me what day it is. 'Cause otherwise, I don't know. That's why I always say two happies, because the first happy is like, oh crap, what day is it? Second happy, oh, it's Wednesday. Happy Wednesday. See what I do there? That's good. I knew it. I was just looking for a round of applause or something. You know, that's how transparent we are around here. Anything you need to know, happy to help. So happy Wednesday. Have you seen the title of the show today? We're going to talk about that. I've got some actual cool things to review with you here today. And but actually a lot of good stuff happened today. I mean, it was one of those days where we started off kind of down and you're like, forget it, you know, and you walk away. But you turn away for a minute and things got really good there. So let's dive in to it. I'll use the S&P here. Quite a good comeback, right? You know, start off with some weakness. If you want to look here, I'll go to where the market opened. So this right here is where the stock market opened. This is all futures overnight. So we're using the futures market to show you this. Anyways, market opens at 9:30 and fought. A little bit more volume and activity at the end of the day. That's very normal. And got it all the way back to almost positive for the day. And it doesn't really matter what index you look at. That's really kind of what got you going there. We'll make this, let's just get to the point today. You know what I mean? You've got the tech sector. That one really led the way. Tech sector started lower, but that comeback, remember the tech sector is big weighting in the S&P. So if that has a big recovery rally, well, the market's going right along with it. And that's what happened today. You also had communication services, which is still the best performing sector in the market here this year. Doesn't look like it, you know, when you look at it. But both of those intraday rallies, even though they weren't the best performers for the day, that's really what helped lift things up there. And yeah, so it was really good. You know, like I said, I started off the day kind of like, and then as you look more and more, you go, look at that little thing go, man. This little stock market is trying to break this downtrend quite successfully at the moment anyways. Now, have you noticed anything different?
You're talking to us?
Yeah, anybody that's listening, have you noticed anything different?
You seem happier.
No, not about me, the stock market.
Oh.
That was a trick. So if you look at the stock market, night and day difference compared to 2022. You remember in 2022, if the market started higher, it sold off throughout the day. If the market started lower, it sold off throughout the day. This year, there's something actually kind of interesting happening. This year, the intraday dips in the market have proven to be viable. It's early. I get it, right? There's only 15 days so far in the year so far. But so far, 2023 is way different. Today would be the 16th day of the year, right? 2023. And so 8 or half of all days in the stock market have finished more than 1% off of their lows. I'm going to spend a second on this because this is really important. So zooming in. These are candlestick charts, right? So let's use today, since this is really easy to see today. See how the bottom, in this case being a tail, marks the low of the day. So if we were to hover our little mouse over here and put it right at the bottom, we find the low is about 39.65, right? Well, this is the 8th day of the year so far where we have closed, which in this case, the closing is this flat spot right here. That's more than 1% from the bottom. Over here, here's the low, and the close was up here, almost at the high of the day. That's more than 1% from the bottom there, see? 1% from the bottom, 1% from the bottom, etc. So 8 days now, we've seen this happen in the stock market here, where we finished more than 1% off the lows. In other words, that's a fancy way of itemizing and showing specifically intraday rallies, right? Bounces, support, things like that. Well, we can use, can't really use the futures market, so what I did is I used the SPY. So if I go back to the SPY, remember the SPY it's the first ETF ever, right? Started trading in 1993, late 1993. It is the first index fund. It's the first ETF. It's the oldest ETF. So we can only go back to 1993. If you ever want to know market type level data, most people use the SPY because it offers the most data that you can get. Where it gets tricky, just as a side topic, if you were to look at communication services and you say, well, I'd like to know how often the communication services sector does this. It wasn't always communication services. Just actually a few years, well, it felt like a few years ago, 2012 or 13, it used to be the telecom sector, right? So you would have to go and know where that break is in order to study it. Anyways, the SPY gives us the most amount of data here. If we were to look back every single year, all the way to 1994, really, because 1993 was a whole partial year, we would find that there are only 8 other years that had at least six days where we closed 1% off the lows. Does that mean anything? Like, is that just like me wasting my time looking up data? No, it absolutely means something, because now we could see that there's a theme in a year. Last year, the theme definitely was not to buy intraday dips. That was not one of the years. But if you look back far enough and you look at those years and you say, well, how many years was the mood intraday to buy dips? Well, you can look back and find those there. There were 8 other years where that happened, and only one of them finished the year down, just by a little bit. The average performance was 22.2% for the whole year. In other words, that mood that was felt on those intraday dip buying days was indicative of the performance for the year. It was the general sentiment of the market and what people believed and everything. And so I offer that as a bit of good news to you for those of you that want the markets to bounce. So the next thing you do, if you ever take a study or someone tells you a stat like that, right? You go, okay, you made it sound good, Dustin, I believe you. Compare it to, what does an average year look like in the S&P, or in this case, the SPY? So if we know that markets that performed just like our market is performing now tended to average a gain of 22.2%. Is that normal for a given year in the stock market? Or is it below average, right? Is the data showing that we're outperforming the statistical average, or is it showing that we're just performing in line? Well, since 1994, the average return in the S&P was 12.4% a year. That's the average, not every year. Don't comment on that, right? That's the average. And out of the 29 years that are available, only 9 of them were negative, meaning 20 years were positive. So here we have an example where 22.2% is the average. Does that outperform the historical just buy the market anyways? Yeah, it absolutely does. So we're on the right track so far for maybe a good year. That's a long way of trying to say that. Also, I don't know if you've heard this yet, but you're likely going to hear it. As January goes, so goes the rest of the year, right? As January goes, and I think the actual saying is, as January goes, so goes the market. And that's one of those fun things. You know how they say sell in May and go away till Labor Day, the Christmas holiday, Santa Claus rally, all those sort of seasonal things. Well, that applies to January as well. And the stats are, as January goes, meaning if it's positive or negative, so goes the rest of the year. Is that true? You know I wouldn't leave you hanging, right? Y'all spend your time here with me. I got to give you the goods. As January goes, here we go. So if January is positive, the rest of the year averages a 10.91% gain. Okay, that's pretty cool, right? As compared to any particular year where the market averages, well, let me see. Let's go back here. Can you see that chart there? I'm going to make sure this is good for you. Yeah, you can see that. Okay, so starting over here. So as January goes, here's the rest of the year. We're going to talk about that. So you have normally just any year averaging 7.37%. You then have a down January. If January is negative, the rest of the year right here averages a very small 2.12%. In other words, what'd you just learn? If January is down, the rest of the year's performance tends to underperform the stock market. All right, so you get a little heads up there. And then if January is positive, the average performance for the rest of the year tends to outperform just buying any particular year. So another reason we're setting ourselves up, at least as of now, for an outperforming year, which we could use because last year was certainly an underperforming year. We then took it a step further and said, well, how's February look? If January is positive, Then how's February look? If January is positive, you get a slight gain in February. February is not known for being the strongest month out of the year. If January is negative, then February tends to follow through, and generally every February is averages a loss about 1/4%. So now you get a little look at that. And then we said, well, the first 6 months of the year, if January is positive, all I really wanted to see was of the 10.91% gains, do they all happen in the first part of the year, or is it through the last part of the year, or just throughout the year? Well, you can see it's pretty much throughout the year. If January is positive, the first half of the year averages about half of the full year's gains. So you're not like, if you want to fine tune it, you're not like going to get ahead of anything and say, well, ooh, all the gains come in March, let me go ahead and invest for March. Yeah, that's not, the case there. So hopefully that helps you. Did I ramble a little bit, man? Gosh, it goes on these tangents. Let's go back over here. By the way, getting back on point here. Where is it? The Russell 2000. I'll zoom out so we can get back to looking at the goods here. The Russell 2000 really, really waking up. It had the sharpest and fastest rally intraday today. So that was the one leading the way in terms of all the major indices there. First to go positive also for the day. I noticed this early in our small cap fund. So if you don't know, we manage our own funds here, and we have a small cap fund. A lot of our clients are in there. And I was looking through it, and I started noticing things taking off a little bit, right? All of our strong stocks, like Acellus here, all very strong, made new highs there. As I was digging through the list, and I won't just go through and say like, oh, look at how great all these are performing. What is the deal with this? There we go. I got to get to zoom out there. Haynes International obviously is performing well, but today really, really strong. Small caps, these are not names that most people know, but you might want to start taking a look, because if you look at small caps, they are waking up. You got GMS performing as well. Even our weaker names, right? So it's easy to look at the good performers, but even our weaker names, they started to play along today as well. Central Pacific, yeah, it had a rough year last year. Also, it had earnings today, so that was one of the better performers. And better performer, I should say, throughout the day. Boise Cascade, I don't know why it's doing this. One of the better performers as well. So if you're looking for the strong stocks that finished near the highs or at highs of the day, you're probably going to notice it was in small caps. All right, moving on. The NASDAQ and the Russell are officially duking it out for first place year to date. Both have gains right around 7.5% for the year apiece, right? And basically, in the NASDAQ today, what started off weak rallied. Even if it didn't finish positive, what started weak, which was a lot of the NASDAQ, finished positive. And if I could just pop on over here, we'll take a look. In the NASDAQ, the stocks that had the biggest impact, you now could probably guess them, right? Because we talked about what led the market today. Tech and communication services, right? So we probably could guess Apple, Nvidia, Amazon, Meta. These are all the stocks that added the greatest gain to the NASDAQ today. And even though some of these were down for the day, intraday rallies, right? Lots of intraday rallies. And you might notice Enphase on there. I have a lot to say about that one. We're going to make that a research post. We are going to talk about, we'll do a research video, and we're going to talk about in the Inflation Reduction Act, there are some companies that are about to get flooded with money from the U.S. government based on what they're producing. They don't get it for free, of course, but they're literally billions of dollars. You think that's going to make the company more profitable? Some of them, just the fact that they're getting money from the government for this Inflation Reduction Act, which is really like a solar kind of thing if you read it, some of them are now going to be extremely profitable, whereas they were not profitable before. So we're going to go through those stocks for you. I'm going to highlight which stocks have the greatest incoming receipts from the Inflation Reduction Act, and how are they going to get paid? How does that all work? So we can, I'll make it simple, but we'll go through that, because that is an area where, like it or not, it doesn't even matter if people go invest in those companies and the stock goes up. The government's giving them so much, they're just going to become that much more profitable. Really, really cool. What else do we have here? Okay, let me just not ramble on for a second. I'll point out something for you. You want to know, so year to date, we talked about the communication services being the best performing sector. That is still true. It has not changed here. And we may need some new batteries or something, right? What's going on here? Little case of the Mondays. Or maybe it's the little, there it is. needs to be closer. So communication services, best performing sector here year to date, 12.6%, beats the consumer discretionary by 3%, right? So it's doing really well. But you know where there's another area out there I want you to take a look at. And I'm not telling you to buy, I'm just telling you, and I can't even mention a stock, right? So I'm just going to guide you towards the area that you may want to pay attention to. And we're going to talk about it in a really simple way. Stocks that are heavily shorted. So you would look up short interest as a percentage of the float. And if you don't know what that means, maybe that'll be a lesson as well. And what we're finding is stocks that are the most heavily shorted, they're not attractive really in a traditional sense, but they're performing the best. And so the way we identify that is we actually go through and we say, break every single stock into groups, and 10 groups, right? So some people say deciles, that's geeky word. And organize them by stocks with the lowest short interest all the way to stocks with the highest short interest. And then I'd like to see how they've performed since the beginning of the year, and I'm looking for a trend. So we can clearly see a trend. Stocks with the lowest short interest have the lowest performance, average 2.9%. A little bit higher, 4.2, 3.6. You can very quickly see that stocks with the highest short interest have massively outperformed everything else. So I don't know why that is. Maybe that's a little dip buying, maybe a little value buying, whatever people are looking at. But if you look through, see if I can make this work. I don't know why it's doing that. Maybe some batteries there. Carvana. And this is just an obvious one because this is currently the most shorted stock relative to its float that's out there. 56% of its total float is shorted, at least as of yesterday. And this stock is already up 40% for the year. Is it a buy? Come on. Like they may be going bankrupt, whatever. It's just, it made it on the list there and you can't even tell that it's up 40%. So something to further drive home my point. If we look at Upstart Holdings, 38%, actually this ranks second, 38% of the entire shares are short, but it's up 36% year to date. Not kind of interesting there? More familiar one, Coinbase. Coinbase, 30% of the total shares are short, and if we leave it zoomed in like this, you can kind of see it's up 51% here so far year to date. In other words, looking for those stocks maybe on a pullback, should that trend continue, that's an area that maybe wets your whistle. Can you still say that? Probably. All right, moving on. Lots of lessons today. We'll do this in kind of a rapid fire mode, if you don't mind, because there are a lot of stocks in the news. There are a lot of stocks with earnings out there. General Dynamics. There you go. Big gap down here to start the day. And by the way, this was the only one today to say this. They had better than expected earnings on higher sales. We haven't been seeing that a whole lot lately there. So better than expecting earnings on higher sales. And they even commented that we expect our total orders to remain strong. Very quickly, that was seen as a dip buying opportunity, as you can see there. ADP, actually, psych. So these guys were the other ones to say that too. Better than expected earnings, revenues just a touch better than expected, and they raised their kept their guidance the same, which was higher relative to the last report. Capital One, way to go, Capital One. We own that stock. Happy to see that there. Revenues as expected, basically just firing as is, less charge-offs, less people delinquent on their bills, at least as of now. So continue to pay your bills so we can all enjoy the gains in Capital One. AT&T, better than expected earnings there, lowered their guidance going forward. I didn't catch what was so good about this. I think the focus must have been on forward growth because it wasn't the greatest earnings report there, kind of like Microsoft. You got Norfolk Southern. Where'd they go? I wrote that one down here somewhere. Weaker than expected earnings. Not a great one there for them. Also not a great one for the economy. If you're taking a look around and saying, well, are we shipping more things out there? It wasn't a good report from them. You got Texas Instruments just itching to break out over this range here. It won't be the time that's going to happen right now. Their guidance was essentially at the rock bottom of the range that everybody was looking at. or analysts were looking at there. Microsoft, weaker than expected earnings. They lowered guidance, just kind of a rough one for them. I don't know if you had a chance to look through it. We'll skip over that one. Boeing, similar, not the greatest for them. They're still recovering, obviously. And actually, it finished positive. Look at them go. So maybe conference call has something to do with that. No, not really great there. Lots of talk about increasing production and all that, but nothing that shows up on the balance sheet yet. So clever. Anyways, Jazz After Dark here last night. Last night we talked about the Roth IRA in simple terms. Tonight we're going to talk about securities-based lending. What is all the stuff you need to know about that? Because it's getting more popular. So we'll talk about how that really works and what it costs and why you would do it, why you wouldn't do it. So you'll learn a little bit about that. And like I said, in the research site, we'll work up, we'll do the video for the Inflation Reduction Act. That's so hard to remember. Inflation Reduction Act, but there's really nothing about inflation in there. So that's not new news to you guys, huh? All right, let's take a look at the questions, see if I can answer any questions, then I'll get out of your way. I hear Charlie's got a treat for me, so I might have to bounce a little early here. Yeah. Oh, you guys are going that way there, huh? Yeah, a lot of short covering going on inside of there, and also people are not stupid these days. Since the meme stock people, I forget what it was called, people now use that as a strategy. Go find the most shorted stocks, and when there's a little bit of momentum, go ahead and try to hop on that. People like to do that. I don't know how successful that is. Apparently, lately it is, but I don't know. Got yourself a covered call on Cardinal? Yeah. By the way, those of you that are into that, I get that question a lot of people that are trying to make a little bit more income in retirement. Don't be afraid to sell covered calls. There's zero risk to do that. Right? That's like the only time an advisor will tell you that, but don't be afraid of covered calls. Maybe do a little education or lesson there. If you're one of our clients, we've actually done classes that are saved in the dojo there that you can take a look at. What do you think of tech? In general, I'm suspicious of this rally, mister. I am suspicious of the rally. I'm not suspicious of the Chinese tech rally, but in the American world, American stocks over here, I'm suspicious. Why does Brazil continue out to perform? Yeah, still best performing country on the planet. Would you guess that? Like if I asked you that question, would you just volunteer Brazil? I wouldn't if it weren't for like not paying attention to it so much. And now we run into this scenario where the world chases returns. Where are we getting the money? Yep. The Russell and the S&P seem both overbought in the short term. They just don't seem to give up. Much, much different, right? You got to at least notice that. So if this is kind of a lesson for anybody that's new to the stock market world here, when you look at the S&P, you got to recognize that this time, that's why I keep changing I make the title down here below me that says the little stock market that could, the little stock market that still could. You got to recognize that, wow, it's not giving up this time. Every other time it hit that ceiling and smacked back down, and it was a horrible pullback from there. It's not giving up. You got to be able to spot that there. Yep. Consumer staples taking a nap, utilities taking a nap. I thought we were going into a recession, right? We keep pointing that out there. And so if that's truly the case, why aren't they doing well? Why don't people want their low, slow, and steady dividends there? And I've seen some of you comment on this. I don't know, what was the NEE? If you like, is that going to come up? If you like utilities, if you like consumer staples, and you disagree with the current flow in the market, that the world's going to go into a recession, if you disagree and think it is actually going to happen, well, you're ahead of the game because you have a discount in utility stocks. You have a discount in consumer staple stocks. It's a tough bet to make right now. But what changed, right? The world was, it's not looking so good. It's nice and weak. It's nice and weak. We come back from Christmas and all of a sudden it's fine. No recession. It's going to be great. What changed? All right. Tough one there. That's a fun way to say it. Are we going to go into a recession like that we actually all identify in the traditional sense as a recession? Or are we just going to say, I don't know, this one's not a recession either, right? I like it. Opinion on 3M. It hasn't been this low. And what's the deal? You want to buy it? You like that it's this low, or are you holding it and you say, ooh, I'm a little nervous about that. I don't know. And come on, man. There you go. What is your, and in the comment that it hasn't been this low since 2013, not technically accurate, but if you zoom out a little bit and you want to say within the last 6 months, yes, I would agree. You've been buying, you got close to 100 shares. There you go. Well, see how, oh, can't see it. If you're buying in this area here, you're doing the best you can right now. I can't disagree with you on that one. You're buying an oversold in the short-term stock, and you're trying to just get a real low cost basis. I can't blame you for that. I can't say that we're not going to break the low here, especially after what they said from their earnings yesterday. But I can't argue with that. Yeah. Yep. And yeah, I see you're down a little bit there. The chart confirms that, and I can understand why. Hang in there. All right, I'm going to wrap it up there, and we'll be back tomorrow. Do it all over again with you, right? Yeah, because tomorrow's Thursday. You guys enjoy the rest of your day. Thanks for hanging out with me, and yeah, we'll see you then.